Well, it's about that time of day again here, folks. Time to get back to work. Monday evening, after all, November 23rd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background. As you can see, got the Eminis, we got the oil, and we got the gold on our radar for tomorrow. Big day coming tomorrow, possibly one of the best days of the week, maybe the month tomorrow as we go into this holiday shortened week. I got a bunch of great setups we're tracking for Tuesday's trading session. Before we jump in though and put the plan together for Tuesday's trading session, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this nightly newsletter every evening, Monday through Thursday, with our best setups for the following day. So make sure you subscribe. That way you always get notified every time I publish something new. And don't forget, if you have any questions for me tonight, any questions at all, drop those questions for me in the comment section below. I'll get those questions answered as soon as possible. And as always, if you tune in every evening, if you're like me and you rely on this video to get your mind right and get those charts right for tomorrow, if you enjoy the video as much as I enjoy making it for you guys every evening, always appreciate that thumbs up button for me here on this video. So again, make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys enjoy the video here tonight on this nightly newsletter. But speaking of the newsletter, let's get this party going here. We got time is ticking. Let's grab a look at what's happening on the charts, and we'll get into tonight's video newsletter. Of course, got the gold, got the crude oil, got the S&P. Boy, gold was a bloodbath day, right? Gold was a bloodbath. News came out 9:45 shortly after the opening bell this morning, and the market just collapsed. Now, whenever we see this much movement in one day in one direction, we know tomorrow there's probably likely to have one of two scenarios to plan for tomorrow. We're looking for deep pullbacks, we're looking for trading ranges. And so on tonight's video, we're going to talk about the best way to trade deep pullbacks, because deep pullbacks are not the same as shallow pullbacks. And of course, what we really hope for is getting that sideways range, because sideways ranges are really simple to trade. We'll talk about the best plan for trading gold and the yellow metal on Tuesday here in just a moment here. Over on the oil, as you can see, is stuck right in the middle of a trading range. Now, oil is a little bit misleading because there was a big bull run up on oil this morning, but how we settled into this trading range tells me I would be careful being a buyer right now on oil. I'm looking to be short. I'm looking at short here on the oil. Got a couple key setups, both selling above at 43.15, 43.20, and selling as we go lower. We're looking at failures and breakouts on the oil, specifically to the short side here tomorrow. And of course, last but not least here over on the S&P. S&P is similar to crude oil in the sense that we finished up today right inside of a trading range. However, though, more of a bullish bias right now on the S&P. Now that means I'm focused on the long side, at least until things change tomorrow. But there's one big problem you can see on the S&P. It's getting narrower and narrower. And I've got one key setup. We always talk about this, right? One key setup I'm watching for anytime I'm worried about tight, right, locations on the chart. So we'll talk about the best setups on the S&P. We'll break it down in details on the crude oil and, of course, the gold. We got a good plan of attack for the gold. Before we jump in though and get these charts going here, let's quickly here tonight grab a look at the calendar for tomorrow. It's a holiday shortened week, as you probably know. We have a holiday coming up here, very popular holiday here in the United States, right? Thanksgiving is on Thursday. So what you want to be aware of, markets are officially closed on Thursday. I do know that a lot of times holidays actually have the markets open, but the markets are officially closed on Thursday, November the 26th. And then, of course, on Friday, we have kind of a half day. I believe the bond markets are closing at 2. I believe the New York Stock Exchange closes at 1 o'clock on Friday. So Friday is one of those days where maybe you get some good price action, but it's really the only reason why they have the market open on Friday is for essential trades, right? Big trading firms that have to do business before the weekend. So, they don't want to keep the market closed Thursday and Friday. So they close it on Thursday. It opens up up for a couple hours on Friday just to let people do business, right? Because anytime you keep the markets closed for more than one day at a time, you get this sense of scarcity. It leads to more volatility and more dangerous price action. So they purposely opened the exchange up for a couple hours on Friday just to give people who have to get some business done. Remember, we are day traders, right? We're speculators. There's a lot of traders out there that work for big trading firms, and they're hedging positions, they're managing portfolios. That is kind of really a day where you hope you don't have to be forced to be trading, right? Going back to the office on a Friday morning and getting some trades on that way. There will be a little bit on Friday morning, but really what you want to think about is Thursday and Friday are pretty much off limits, right, when it comes to trading this week. And the reason why that's important for us is because the next 2 days are very, very important. As you can imagine, we've only got one more day next week on Monday, the 30th, before this month is over, right? And this month really flew right by, right, with the election and, of course, right, everything that's still kind of up in the air around that. So there's a lot that's gone on this month, and we're staring right down the barrel of the end of the month. Why that's important is because as we get towards the end of the month, we start seeing volatility increase, volume increases. So we're expecting to see some pretty exciting days over the next 2 days here. Now, as I mentioned to you earlier, there's quite a bit up in the air right now, which may lead to a little bit of range-bound price action, but we're expecting to see some pretty good volatility, right? Vaccine updates, pandemic and COVID updates, right? Obviously, I live here in Los Angeles. They're locking us down again here in Los Angeles, right? A lot of major cities around the world are bringing in new lockdowns. That is a big variable that we're going to we'll be keeping our eyes open to see how the markets respond to that. And of course, the contested election, right? We're seeing more about the U.S. presidential election develop every day right now. So really, this new lockdowns for COVID, the ongoing saga of this presidential election in the U.S. Those are some I wouldn't say black clouds, but those are some known unknowns as we go into the next couple days here. So I'll tell you right now, if we keep seeing more things come out regarding COVID and the pandemic, right? If any big bombshells come out in the next couple days here regarding the election, this could really spice things up here for us in our trade room every morning here, Tuesday and Wednesday this week. So be aware of that, right? We're looking at a potential powder keg here in the markets over the next 48 hours here, right? Next 2 days, right, in the markets. Now, looking at tomorrow's news, you'll notice there's really only one big news event tomorrow, and that is at 10 o'clock Eastern time. So news tomorrow at 10 o'clock, but then look at all the news coming in on Wednesday, right? Just a peppering of news here on Wednesday. And really, when you look at it, all the big news is on Wednesday morning. Wednesday, they crammed as many big news reports as they could possibly fit. It's like a darn clown car, right? Where the clowns keep coming out. You got durable goods, GDP, jobless claims, personal income, home sales. I mean, it's just nonstop all day on Wednesday. So we're definitely looking forward to a busy day on Wednesday. Tomorrow, of course, right, we got that consumer confidence number at 10 o'clock Eastern time. And honestly, that really isn't that big of a news report compared to the GDP, the jobs, right, the personal income numbers coming out on Wednesday. So be aware of that. Increased volatility is expected. We may see some kind of wait and see price action because of this pandemic, this kind of resurgence of the virus, and of course, right, the pending certification or ongoing saga of the presidential election here in the U.S. So 10 o'clock Eastern time tomorrow, be ready for that consumer confidence. And don't forget, guys, we get together every morning in our trade room at 8 o'clock Eastern time. I'd love to have you there, right there, trading this stuff with us. I'll put a membership link for you guys to join as a member and come out and join me every morning in our trade room, 8 o'clock Eastern time. We open things up. I'll put all the information you guys need to get registered in the description of this YouTube video, or if you're on the blog at Sideways Markets right now, I'll put a big button for you to get started. Below this video tonight on the trading blog. So again, grab that link in the description, get registered, and don't miss Tuesday and Wednesday here in the trade room right, this week. And I should also mention, too, I'll come back tomorrow night and we'll do our newsletter tomorrow night, obviously, but there'll be no newsletter on Wednesday or Thursday evening, right? So a short newsletter week here this week. We'll do it tonight, we'll do it tomorrow night, but obviously a newsletter on Wednesday will be a little bit of a waste of our time. So we'll stick to the Monday, Tuesday nights, and of course, we'll all enjoy some turkey and stuff and get some L-tryptophan going through our bloodstreams, and we'll come back and we'll finish up the week next week, or finish the month next week, right, and get after it in the month of December. Should be a very good month of December here, but I'm getting ahead of myself. Let's get some charts going up here. You guys on the plan for tomorrow. Let's grab some charts here, shall we? S&P, oil is looking good, and of course we got the yellow metal, right, that gold futures all the way over on the right-hand side. Let's jump first to the S&P here this morning, or this evening, I should say. It's been a busy Monday. What do we know about the S&P right now? What's the key takeaway on the S&P? The key takeaway, really, in my eyes, is we have a bull market overall. It's difficult to call this a bear market, so we're bullish overall. Want to buy at support. And we have a range, right? The range on the chart is a very important clue, because what is a range? Ranges are balanced. The range itself, right, acts like a magnet. And what do we do in a range-bound market? We find levels of support to buy below the range. We find levels of resistance to sell above the range, right? And we avoid the middle. So whenever I see a range-bound market, my plan is to buy low, sell high, and avoid the middle. And remind me, guys, what is the most effective entry setup or entry pattern for trading a range? We always focus on failures, right? Focus on failures. Because the range is a magnet, we wait for the price to go lower, we wait for sellers to fail, and we buy back up. Because the range is a magnet, we wait for the price to go higher, wait for buyers to fail, and you got it, we sell it back down. Buy low at support levels, right? Buy low at support levels, sell high at resistance levels overhead, focus on those failure patterns. Now, the one big variable that we see on this particular range is there's actually two things that are a little bit concerning. One is the fact that we went through the high of that range. That means if we pull back below the low of that range, momentum is going to be a concern. I'll show you more examples of that on the crude oil once we get to that chart. Also, too, you'll notice possibly the biggest clue on this chart is this triangle, right? You'll notice how the market's getting narrower, right, and narrower. Now, and this is not good if we get the pullback, because if I get a pullback here to buy below that low, what's my concern? My concern is I'm buying into a trend line or a resistance level that gets closer and closer and closer. So let's recap this. We know we're bullish, right? Well, at least it looks very bullish to me. I want to be a buyer. I want to buy underneath the range at a support level, like a trend line or a swing line, right? Find a support level. And I want to focus on failures, right? Focus on failures. Focus on breakout failures. The challenge we have, though, is we have this trend line coming down. So how can I focus on failures while at the same time avoiding that trend line? Easy. We get one very simple pattern, and it's called a two-try trap. Basically, I want to get below the range. Again, I want to be a buyer at support below the range, and my goal will be to avoid buying into that trend line by ultimately waiting for the bears to try once, the bears to try twice, and I'll look for a trap entry, right, to get long. Now, what this will do is this will give me it'll give me the best fighting chance to buy at the lowest possible price. Now, notice how I draw this, right? As the market pulls back, they try once, they try twice. You can see something similar back here, right? Market runs lower, bears try once, bears try twice, right? Little tiny trap below that low. That is the same idea we're looking for over here. I also like this two-try trap pattern because, again, as I mentioned before, if we do end up, well, you'll notice we went through the range, right? And once we pull back below it, that momentum will feel pretty bearish, right? It will. Not to mention the fact, if we do pull back below it, we will have basically failed to complete that pendulum swing. These are even more reasons. Let those bears try once, let them try twice, right? And go after that trap. Again, we call it 2-try failure pattern. This one, I want a trap entry to really absorb all the bear momentum and avoid buying too high into that trend line. Now, obviously, if the market goes higher, right? What if the market makes a jump and goes higher here? The next step is we know where this market wants to go, right? It's going to want to retest these highs. It's going to want to reach that pendulum swing. Remember, ranges are balanced. The amount of the move below the range is the amount of the move above the range. That is really what I would think the buyers are really hunting for, up around that 3,600 area. And if they can get through that area, there's potential 36.23, 36.31 with the big granddaddy high up there, right at 36.37 even. That's a pretty big pill to swallow to go all the way up the ladder for tomorrow. But I'll tell you right now, I would have no problem trading one of two breakout patterns. Because we're inside of a range, you've really got to be careful with the market going higher here. There are two patterns I always look for. One that I'm looking for here right now, because of that pendulum swing, will be a 2-try breakout. Strong move up. That puts the momentum in the back of the buyers. Shallow pullback, higher high, and a trap low. Now, why would I look for a trap below this low? Well, what's a trap good for? Traps are great for what? Avoiding buying too high, and that's exactly what I'm trying to avoid in this situation. So if we can get that big run higher here, if we can get that pop going higher, that will give the buyers the wind at their back, right? I will then look to buy low with a trap. And don't forget, I'm always looking for ways to incorporate the low of a channel on these, right? So always look left, keep on drawing those hidden channels. So remember, trap patterns are the best to avoid buying too high or selling too low. And guys, I talk all about traps and failures and breakout patterns and all my favorite patterns. I talk all about those patterns inside the free trading course here at School of Trade. I'll tell you, everybody loves the free trading course. I go over my entire 3-step strategy. I talk about my 4 favorite entry setups. I'm going to send you hundreds of examples of how we apply those setups to our favorite futures markets. I'll tell you, if you enjoyed the video newsletter and you want to make the most of our time together, our free trading course is a great add-on to this video newsletter. And of course, right, a lot of my clients tell me it's one of the best educations they've received on the internet so far for free, right? So grab that link popped up there in the upper right-hand corner. Again, I'll put the link for you guys down in the description of this YouTube video as well. But grab that link, get registered for the free trading class, right? You will most likely, right, not regret it. And of course, as always, right, I'll put all the links you need in the description of this YouTube video. All right, let's keep this party going though. There's one more breakout pattern I'm watching right now, and the final one would be that 1, 2, 3 breakout, right? So strong move up, pull back to the moving average, jump off the moving average. Now, if I can get this market to go 1, 2, 3, right, off the EMA, now we know we get a lot of momentum for the bulls. I'm going to mark up that high. I'm going to mark up that low. And I always look for entry off the first test of that new channel. Now, there's potential the market may do this, 1, 2, 3, right? But remember, though, we're running into that pendulum swing up there, so you want to be thinking about that 2-try trap, right? In that type of situation, right? So watch that 2-try trap. If all we get is just that strong run higher here, mark that low or mark the high, mark the low, and go forward from there, right? So we got some good ideas here for those buy setups here for tomorrow. Don't forget, if we sit here and go sideways, stay out of the middle. Now, I'll tell you, if we end up going sideways here for, a relatively considerable amount of time here overnight, and if we start to blur these trend lines out, now things become a whole lot easier, right? So if we end up going sideways here and take out some of these trend lines and really develop this into a bull market, into a range, we can now look for straight up seller failures below that trading range, right? We can buy into stop losses on that move lower, right? So again, if the market does, right, kind of sit here and go sideways for quite some while, that will confirm the bullishness for us. We'll be looking for support levels below the range, And my favorite entry pattern, of course, wait for the pullback, wait for those bears to try to get short off the moving average. Now we know what stops are, and we can buy right into stop losses. Again, don't forget, though, incorporate areas of support below the trading range, along with what's the best pattern? Focus on failures when it comes to a range-bound market. Now, what if I want to get short on this market right now? If I want to short this market, I've got two kind of basic options right now. One would be getting a crown reversal off the high. So we're going to take the highs out, right? One would be a crown reversal off the high. So take out the high. Buyers try to buy once. They pull back. Buyers try twice. That is what we call a crown reversal off the high, right? That is a very, very reliable setup, probably the most reliable with a reversal environment. Now, the key here is got to make sure they take the high out first, right? Buyers try once. Buyers try twice. There's that trap high as always, right? Traps are my favorites, especially when I'm trying to predict a reversal like this. That is called a crown reversal pattern off the high. Or another pattern would be that strong move down, pull back to the moving average, jump off the moving average. Now this one's important because we got to clear through these lows, right? Got to really go through these lows, right? We may only see this. It may only make a run like that, and we may still be in the mood here for a two-try trap going back up into that range here. I'm going to want to see a strong move down. I'm going to want to see a pullback to the moving average, and they've really got to blast, right? They're going to take out these lows on some significant strength. If they can get that 1, 2, 3 reversal, 1, 2, 3, and blast to those lows, that momentum should be enough to give us a nice short off the high of that hidden channel. Remember, 1, 2, 3 reversal, or in this case, 1, 2, 3 breakout into hidden channel pullback. 1, 2, 3 breakout, right, into hidden channel pullback. First test is always the best test, right? And of course, I'm sure there'll be some other opportunities tomorrow morning in our trade room, and we'll make sure we cover more details tomorrow morning in our trade room. We'll go over the best setups here we're watching for tomorrow on this video. So again, don't forget to join that trade room. Grab that link to come join us in the description of this YouTube video. Let's keep going. Your S&P, got a pretty good plan there for the E-mini. How about some oil? How about some oil? Now, like I mentioned earlier, oil looks like the S&P, right? It's a range. There's that big, bold move, right? Going, pretty much to begin the day here today. It looks like it's the exact same thing, doesn't it? But there's one big problem, and that is, look at it. If the market rolls over and goes lower right now, does that look very bullish to you? No, it doesn't, right? Why? Because we're starting off above the range, right? Go back to the S&P for a second. Right, and you'll notice we have this big move up, right? Momentum is very much a bull market, right? Go back to the crude oil real quickly here, and you can see we just simply don't have that momentum, right? This is more of a bear market than anything else right now, right? So we definitely have this bullish move going higher, and we get a range, but that's about all we have. That's kind of consistent with the S&P right now. So we are bullish into a range, but that big, again, that rotation off the high into that trading range, that says you've really got to be careful being a buyer right now. Not to mention, if I go a little bit further out, keep going, where are we? We're actually right up at the top of this, there we go, of this big trading range, right? Now, keep your eyes on this area. Keep your eyes on that 41.34, because you may recall this from earlier on in the month of November, right? We had that triangle 41.34. That is a big magnet for those sellers. And then, of course, from there, 39.72. That could be a little too much for tomorrow, but 41.34 is easily within striking distance, which is basically $2.50 down. So that could easily happen, especially with the threat of more lockdown orders coming right around the globe right now. So, they're already basically swimming in crude oil inventory right now, and that's definitely not going to help the demand overload the supply there. So we know the market, again, has a big magnet down there, right? Where is it? 41.34. It looks like a big spot, a big move to go, but it's not really that big when it comes to oil. This can easily tumble. So I'm definitely leaning towards the bear side more than the bull side. What do we have? It's a range, right? So what do we do in a range market? We buy low at support levels below the range. We sell high at resistance levels above the range, and we what? We avoid the middle. Yep, we avoid the middle. The middle is where good trade setups go to die. Buy low at support below, sell high at resistance above. The range is the magnet. And what's the entry pattern we look for? If it's a range, we focus on failures. Whenever I think of a range, I think failures and I think breakouts. Right? I think breakout failures, and I think 1, 2, 3 breakouts, 2 try breakouts. Again, I cover all these patterns in that free course I mentioned earlier, linked up in the upper right-hand corner. First of all, how can we get short? What if the market runs higher here? If the market runs higher, what's my concern? My concern is we have a trend line coming up off of this low. How do I absorb that concern? What is the concern? The concern is that as the moving average comes over, if these buyers try to get long, I'm not going to have a very clear line of sight to get short, right? I would normally look for a buyer failure, right? I'd wait for the market to go up, wait for the buyers to buy the pullback, and sell into those stop losses, right? That will be a typical buyer failure pattern above the high of that trading range. But in this particular example, we had a problem, right? You could also say, too, we're coming off the low. So if the market goes higher here, this will also feel, not completely bear, not completely bullish, but you're going to start seeing a lot of buyers, right, take a nibble on this. So my big concern is if the market runs higher here right now, my big concern is I got to worry about that rising support trend line, and I have to worry about the bulls, right? So what's the remedy for that problem? It's the exact same pattern we talked about on the S&P. It's a trap. Right? It's a trap. I want to wait for the price to go up. In these situations, what we want to do is wait for the buyers to buy the first pullback, a little bit lower low, wait for those buyers to come in and find that trap high, right? Traps are your go-to pattern whenever you're worried about, right? In this case, selling into support. So a bull trap, right? I call these 2-try trap patterns. Buyers try once, buyers try twice. We need the trap to avoid selling too low. Right now, what if the market runs lower? Right? Can we take it as it goes lower here? We can, but what's the concern? The concern is the range, right? So as the market runs lower, can I sell this pullback? Right? Can I sell that pullback? Not if you want a high probability trade, right? That's a very low probability trade because you're running into what? Into support. And what's going to happen? Buyers will be trying to come in and buying this thing back up. Remember, the range is the magnet. So how do we avoid that problem? We avoid that problem with a 1, 2, 3 breakout pattern. This is where I think the easy money is for the sellers tomorrow. Again, we'll look for that 2-try trap right above the high here. That's a pretty easy pattern. What would be the easier money, though, would be that strong move down, right? Take out those lows, and then show me, bears, that you mean it. Hold the pullback and give me some momentum, right? Give me a nice jump off that moving average. If I can get that 1, 2, 3 breakdown, I can now mark that low, I can mark that high, and now I can get aggressive right off the top of that new hidden channel. We call those 1, 2, 3 breakouts into hidden channel pullbacks. First test, as always, is the best test. And again, as I mentioned before, there's one big magnet down there, 41.34, make for a very, very easy target if this thing really starts to push lower. Now, we may also see something like this, where the market doesn't pull back and go, but it kind of collapses down. If the market kind of collapses down, what other pattern could I use? It'd be a 2-try breakout pattern. Look for a shallow pullback, a lower low in price, right? And that trap high, because if the market just simply grinds lower, right? If it just kind of grinds lower like this, what's my concern? My concern is I'm chasing the market. My concern is I'm not selling high. And if my concern is selling too low, you know what I'm talking about. Yep, trap, trap, trap. Look for those trap patterns to avoid selling too low. These are really awesome setups. My only complaint is we don't get them as often as I would like them to get, right? And again, don't forget, right, always looking for those hidden channels drawn backwards, right? Anytime I can incorporate a trap high with the top of a bear channel, sign me up, right? Sign me up, especially if we can get a nice strong momentum push going lower to kind of fuel this thing continuing to run. Now, what is interesting here, though, is if this market decides to go sideways, right? Let's say, for example, the market goes sideways here for a while and sits in the middle of this trading range. I'll be honest, if we spend a considerable amount of time going sideways here, that is going to balance this market right out, right? It'll be a little bit of bulls, a little bit of bears, and I'll tell you, just like the S&P, if we go sideways here for a couple hours overnight and we're sitting there sideways, I think it's all bets are off. I think find resistance above, find support below, right? And combine those areas with your breakdown, seller, right? Sellers try to get short. We're buying into stop losses. What do we call those? We call those failure patterns, right? Price goes up. Moving average comes over. Buyers try to buy the pullback there. What do? We use the range as a magnet. Remember, in this situation, the range continues to drag markets lower or sideways. In that case, find resistance above, find support below, buy low, and sell high right above that trading range. And again, focus on failure patterns. Failures are my go-to patterns. Anytime I have a range-bound market, I cover extensively those failure patterns in our free trading course linked up in the upper right-hand corner there. And again, all the links you guys need to join tomorrow's trade room in the description of this YouTube video. All right, we're looking pretty good. Now, how do I buy this market? What do you think the way to buy this thing would be? I'm worried about momentum in the short term, right? So the easier money to be a buyer on this, the easy money would be, or the easiest money would be, a strong run up, a pullback to the moving average, right, and a jump off the moving average. Right? That would be the easiest way to convince me the bulls have control. I can mark up that high. I can mark up that low, right? And then, of course, the first test is always the best test. Now, I know what you're thinking right now. Why don't I buy that first pullback? I don't buy that first pullback because you'll see a lot of times, you'll see big moves up, but if the market wants to go into a range, that pullback will fail, right? I don't care how strong the move up is. And let's not forget, again, where are we? Right? The top of the range up here. Remember, this is major resistance, right? 43.33, 43.36. That's a big deal. It's the highest point on this chart right now in this 0121 contract. So you really got to see them hold, and then I can get in. Then I can grab that pullback from there, right? Taking that first pullback, it's just a gamble. It's a straight up gamble. Maybe it works, maybe it doesn't. We can do better than that, right? We can do a lot better than that. It's better to stay patient, save your bullets for the best entry setups. And don't forget, right, every morning in our trade room, I'll make sure you guys are staying patient and staying disciplined right, as you look over my shoulder every morning in the trade room. That's one way to trade the long side here, right, on the oil. And then what if the market went lower? Could I buy down here as well? I could, but if the market runs lower here, what's the problem? Momentum. The range is still in play, though. I will say that, right? The range is still a magnet, even if we go lower here, right? Again, but we have to be careful, though, with what? Momentum. Now, what's my favorite way to be a buyer when I'm worried about bear momentum? Well, I like to use what I call a nested failure pattern, right? In other words, instead of getting aggressive and simply buying into stops, right, of those sellers, right? Because again, what I would normally do would be, if this was a bull market, right? If it was a bull market with a range, I would simply wait for that price to pull back. I'd wait for bears to come in, try to get short off the moving average, and would buy into those stop losses, right? If the market was a bull market into a range, that's exactly the pattern you're looking for. The problem is it's not a bull market. It's a bear. Well, again, it was a bull market, but now rotating over, right? It's a bear market. So in those situations, what you want to do is you want to give the sellers the benefit of the doubt. Let them try not just once, let them try twice, right? Let them try once off the moving average, higher high, twice off the moving average. Now, I'll tell you, there are a lot of different ways you can take this trade. You can draw a trend line off this. You can find a trap right below that low. There's a lot of different ways you can take nested failure patterns. And we'll go over the fine details of that tomorrow morning in our trade room. But think about bears trying twice, right? And then going back up. All we're doing is we're buying into stop losses after those sellers commit a couple times for the market going lower. Make sense, guys? All right, pretty excited for tomorrow's session here on oil, especially because of these lockdowns coming, right? Last time we saw fresh lockdowns, oil really took off to the downside. We'll see what happens here for tomorrow. Speaking of tomorrow, should we wrap things up on gold? Speaking of gold, right? The yellow gold here, right? The gold. Let's get some gold going here. The yellow metal, the gold futures here. Now, just a heads up on this. Gold has rollover scheduled the 30th of the month, I believe it is. So probably not this week, but next week, early next week, or possibly Friday morning when the markets open up. So be aware of that if you're a gold bug like we are in our trade room. Gold rollover is from what I was told from the broker, right, is around the 30th of this month. So maybe it's this Friday, maybe it's next Monday. You know what I mean? It kind of varies based on, month to month out there. But be aware of that, though. On the 12/20 contract right now, we'll be going into the, dare I say, 2/21 contract, right? The 02/21 contract is coming up next year on the gold. So that will obviously be later on in the week, but be aware of that as we go. All right, gold up next here. What do we got on gold? Gold is one of those markets that it went so far today. We're obviously bearish, right? The key takeaway, though, is it's an obvious bear market. I don't think you need me to tell you it's a bear market right now. The biggest thing I see, though, is how far the market went, right? For example, you can measure this leg, you can measure that leg, and you can see they blew right through that measured move and just never looked back. Now, I'm going to skip the why. I don't care about why the market did this today. We know we're bearish. And, dare I say, the market went a little, quote unquote, too far, right? It looks like they got a little bit over. They overdid a little bit there, it looks like, here on the gold. And typically when that happens, you're going to see one of two scenarios. Either a range the following day or a deep pullback, and possibly both. Doesn't mean you can't have both of those, but you do want to be aware of that. Now, we know we're bearish. I want to find resistance levels, right, to sell overhead. So you'll notice I've drawn a trend line off these lows, up around these highs. This would be, if I had my pick of the litter tomorrow morning, this would definitely be where I would be looking to get short, right, up around the highs of this channel. I've also got this, right, I've also got a lot of what we call reversal lines there, right, at 48 and 50. So those areas here are definitely looking good here, right, for resistance there above. And of course, get that 43.9 level, right, which is the base of what could be seen as a spike in channel, right? So last but not least, the last clue here is kind of a spike in channel, right? That's what creates that beginning of the battle zone, right? That 43.9. So the minimum I'd want here right now is at 43.9. The maximum would be up around the high, right, of this channel. And that's what gives me kind of this little sell zone I've got marked up right over here. So again, you've got the top of that spike in channel, right? Spike in channel down. Spike in channels almost always pull back right at the base of that channel. So that gives us that 43.9 area. You've got the prior swing, that gives us those two. And of course, that hidden channel drawn backwards looks pretty good to me, right? A lot of resistance there up overhead. So we know where the market wants to pull back. Now, if we get that really deep pullback, there are two types of patterns you want to look for. Remember, if a market goes this far, right, in one session, a lot of traders are going to look at this and say, this is way too low to sell, right? It's just too low to sell. We don't want to sell low after a big bloodbath move like that, right? Sellers are waiting for something that gives them a chance to sell high, right? Sell at resistance, right? Selling up above us. So the key here is I want to wait for that pop off of these lows. When we get the pop off the lows, you can see it almost forming already right now. We're going to have to deal with a rising support trend line. What you want to do is you want to draw that trend line, right? And the goal is to get underneath it and use it as an entry, right? So that's kind of the idea here. If the market does run higher, if I can zoom in a bit closer on this for us, right? If the market does want to run higher here for us, and hopefully it will, we'll then want to draw that trend line up, right? That trend line now really creates a bit of a problem. What usually happens when you get these two-legged pullbacks, right? One leg, two leg. You want to look for two types of entries. One is the entry where we bounce, we go lower, we come back up, right? And we're grabbing it from there. Now watch how I draw this. You'll notice how the buyers are trying twice here. Okay, that is one of the keys to a two-legged pullback, one-legged, two-legged pullback, right? Remember, what's the problem? Momentum, right? We get all of this when I get a nice deep pullback like this. Deep pullbacks are great for risk-reward ratio, which is great overall, but you pay a price for that. The price you pay is momentum. And so as the market pulls back, let the buyers try once, let them try twice. And again, we call these nested failure patterns. The key, though, is you want to absorb that bull momentum. Meanwhile, get underneath that trend line. That would be one of the best entries you could possibly imagine right here on the gold tomorrow. Now, be aware, a lot of times what happens is the market does this, and it makes it run lower. In other words, it doesn't pull back to that trend line. If the market takes off the downside, right, and does one of these guys, right, like that, what you don't want to do is chase after it. Because as you chase after it, you don't quite know where that low of that range is just yet. And oftentimes what happens is it'll bounce in your face. So you chase after it, you get into too late, it bounces up, yep, trap high. So that's going to be, remember, anytime you want to avoid selling too low, what do? Look for trap entries. Okay, see how that plays out? So again, the ideal scenario is get underneath and go. But if we don't, right, look for a trap to avoid buy or to avoid selling too low. Again, this is what we call a two-legged pullback, right, or a 2LP, a 2LP for short, right, in our trade room. So two-legged pullback, draw the trend line, get short off the underbelly of that, right, of that trend line. That will be something to keep your eyes on here for tomorrow. So deep pullback is what we're looking for. And again, just remember, what you want to see is that deep pullback. Anytime we see momentum like that jumps off the low, I still want to be a seller, but I want to give the buyers one try, two try. Remember, keep that in mind tomorrow if we do get that really deep pullback. Focus on buyers trying once, buyers trying twice, and then hit them right in their stop losses, right? Stops will be just below those lows, and you can literally sell right into those stop losses. But think about, we'll put it this way, anytime I see a market that is quote-unquote gone too far, I'm expecting that deep pullback. And when we get that deep pullback, I'm expecting bottom pickers to try to take this trade higher here. Let them try once, let them try twice, and we can sell into stops going down from there, right? So two-legged pullback and or nested, right? Remember, these are called nested failure patterns. And again, you got to grab that free trading class I mentioned earlier. You'll learn all about these key patterns. And then, of course, what about a range? If the market goes sideways, this is definitely very likely, right? And again, we may see both. We may see a range and a deep pullback. I would expect, though, a market that dives down like this today, expect a trading range. Now, what do you do with a bear market into a trading range? You use the range as a magnet, you find levels of resistance overhead, and you combine those levels with what? Failure patterns. You got it, right? It's a range, so focus on failures. Wait for that breakout. Wait for that moving average to come over, right? Moving average comes up. Buyers try to buy the pullback. All those poor buyers buying right into resistance, buying in a bear market. We know exactly now where their stops are, and we can get short right into those stop losses for a buyer failure pattern. And again, remember, if for some reason that pullback really jumps, right? If it really jumps, now what do? Let them try it once, let them try twice. Why? Because momentum is a concern at that point, right? We've covered that quite a bit, so hopefully you guys can get that nailed down for tomorrow. And again, we'll watch this stuff together tomorrow morning, right, in our trade room. Now, all this talk about deep pullbacks, can I buy this darn thing? What would it take to be a buyer on this? It would take a strong move up. It would take a pullback to the moving average, and they're going to hold that pullback. Right? What do we call those? 1, 2, 3 reversals? You got it. Mark up the high, mark up that low. First test is the best test. Absolutely. 1, 2, 3 reversal into hidden channel pullback. I know I want to grab that first pullback, but you can't trust it. That's the problem. Where do the buyers want to go? The buyers want to go all the way back up where they came from, right? 1875, That little range up there, that is easy pickings there if these buyers can pull a miracle out of their back pocket here for tomorrow. Last but not least here on the gold, what if the market keeps on rolling lower? What if it keeps on rolling lower? Not a lot changes. We're still waiting for that jump up. I'm still waiting for those buyers to come in and try and fail, and we'll keep on looking to short the pops as we go into, right, if it does keep on rolling lower. Now, where would the bears be trying to go if the market rolls over and keeps going lower? They're trying to get down to that 1855 or 1815.5. The next level below that is a mile away down here. Where is it? 17. Come on, look at this thing. 1728 all the way down. Probably not going to be that far tomorrow, but 1815 is certainly in the cards if these bears keep this party rolling to the downside. So excellent example of a market that, quote unquote, gone too far, so to speak. Wait for that range, look for that deep pullback, focus on those nested entry patterns, right? Because of those deep pullbacks and the shift and momentum. Boy, I'm starting to get excited now about tomorrow's trading session. Again, a short window of opportunity here tomorrow, but I don't think, but don't let that stop you from joining us in the trade room every morning, right, this week here, 8 o'clock Eastern time. I would love to see you there, right there with me. I'll put all of the membership links you guys need in the description of this YouTube video, so get registered. If not, make sure you grab the free trading course to learn the details of my favorite 3-step trading strategy. Don't be afraid to call the office if you have any questions. I've also got live support on the left, live chat on the right. Any way you want to get more information, reach out and ask for help. Drop those comments in the comment section below if you got them. Hit that thumbs up button for me if you like the video tonight. And as always, make sure you subscribe to our YouTube channel so you don't miss tomorrow night's nightly newsletter. But that's it for me, guys. Have a wonderful rest of your evening. Hope you enjoyed the video. Hope you'll share this video with some friends. And hope you'll see you back here tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.